Testing your strategy. All right, so back testing. So why we test? So looking back through charts and tracking how your potential strategy performs over time serves two purposes. One, confirms whether your strategy is or can be profitable, and it gives you a chance to tweak some of your rules based upon what you see. We want to adjust everything we can that allows us to extract more profit, and hopefully without adding much to our risk. And number two, testing helps us build confidence in our strategy, seeing it work day after day in different market conditions, first understanding and then knowing that it all boils down to our consistent execution. So by now you should have a very good idea of what your strategy is going to look like, and hopefully, if you already had one, how you're going to improve upon it. Personally, I love going back through months and years worth of charts, looking at how I would or could have traded my strategy, which also boosts my chart reading skills and market intuition. To be objective. So at this point, you want to create some hard rules to test against, specific entry and exit rules for your strategy that will allow you to be consistent when looking back through the charts. So I realize that the strategy we have been putting together is probably a lot different than others you have seen that are generally easier to test. For that reason, it is especially important that we remain unbiased while we are tracking and documenting potential previous trades. It's super easy to give yourself an edge and assume a better entry or exit price than you would have gotten in the heat of the moment. This is also, slippage comes into play here as well, right? I like to give myself a worse entry and exit by a couple of points to give myself a buffer and make it more realistic. Be as objective as possible and don't forget to add in commissions. Create hard rules and stick to them. Do not be too greedy. It is impossible to sell tops and buy bottoms, so skip that trap. Our goal is to take as much as we can out of that easy center of the move as we can. It's okay to tweak your rules as you go along, but you must make a choice as to what you will keep or discard so that you can be consistent. Hold on to an idea long enough to thoroughly test it before you toss it out and move on to the next idea. Developing 2 or 3 different strategies that you can track over time is okay too. Just make sure that you can keep your focus on target and to not accidentally blend them together during live trading. Forward testing. So this generally relates to tracking our strategy from the present forward. I like to know my daily performance as compared to how I should have traded the day. I will give myself a score on that and make a plan to improve my weak areas, but primarily my strengths. I recommend Excel or Google Sheets to track your testing data. I realize that there is some extra effort involved, and there should be. A professional keeps meticulous records of data and is constantly looking for ways to improve. At the end of the next section, I will introduce an online trading journal that can potentially do all this work for you. Now, a cool option and a great way to get extra practice is something called market replay. Now, on some platforms, you can literally replay the day at various speeds and trade it as you would any other day. Again, it's important that you do not cheat yourself by peeking ahead. Pick a random day and start trading where you normally would. You get practice, chart time, and data all in one. I would still consider this forward testing even though it's in the past and not technically in the future. And so there's a lot to be said about tracking that data and entering it, by hand. Now, a lot of different programs will have it to where you can export your data to, like I mentioned, whether it was Excel or Google Sheets, and they'll import that stuff. But to really hand comb through the data and to look at each thing and all that, it just gives you, again, like when we talk about putting your finger on the pulse of the market, like it gives you insight into exactly what and how you're trading. And a lot of times your errors and the your mistakes and your slip ups will really pop out and kind of hit you in a bigger way as compared to a service that collects all that data for you, where you can just kind of look at it real quick and be like, okay, well, yeah, that's a bummer. Yeah, I kind of messed up the entry there. And then, oh yeah, I kind of, I took too quick a profit there, so we'll do better there and all that. When you're looking at each piece of the data and you're looking at a spreadsheet like that, and you've got all your metrics and stuff laid out, which we're going to go over here in a little bit, it just really, really has, at least for me, it had a big impact as far as, okay, I see the pattern of my mistakes, but like, and why is that? And it's important to really take the time to go, what's going on? Why am I struggling having consistency in a specific area? And then take that back to the mindset and say, okay, obviously I'm not looking at something correctly. Is it my trading size? Is there something psychologically going on that I'm battling that I need to work through? All of those are great exercises to improve over time.